Good afternoon and welcome you again. We are going to discuss with you that is tax saving options and e-filing return. As in previous lectures we have discussed in detail about the various tax saving options. What do we mean by tax? What are the various types of tax and what do we mean by deduction, exemptions, what is assessment year and what is financial year. Now in this section we are going to discuss about additional tax saving tips. What are the additional tax saving tips which are available or options available to the individual taxpayer? First one is the tax saving, that is mutual fund ELS, lock in of 3 years and mark linked returns. This also help in additional tax saving. Then we have the lowest in invest in NPS. When we are going to invest in NPS, then definitely additional of rupees 50,000 benefit over 80C we can avail under this category. Then we have the tax free bonds. There are so many tax free bonds are available in the market. Income from certain bond is tax exempt. This kind of income is not covered or included in the taxable income. Then we have the use HR exemption. You can use if you living in a rented house, then you can avail the facility of HRA. Then we have the file returns on time, avoid penalties and get refund faster. So basically these are the tips how we can save tax. Then we have the old tax regime versus new tax regime. This is a glimpse about the basic difference between these. In this you can see on a slide. First column we have the feature in, and then we have the old regime and we have the new regime. As far as the deductions or exemption is concerned, in old regime we have allowed ATC, ATD, etc. But in case of new regime, these exemption deductions are not allowed. As far as the tax rates are concerned, in old regime the tax rates are higher, but in case of a new regime the tax rates are lower. As far as the best for concern is it is best for high investment. When the purpose of investor to go with high investment, then old regime is okay. And as far as the low investment taxpayer is concerned, the new regime is beneficial to them. So this is the basic difference between the old tax regime versus new tax regime. Then we have the smart tax planning tips. What are the smart tax planning tips available for a individual or taxpayer? First one is start investing early in the financial year. You have to invest in the very first month when it starts from the financial year. Then we have the choose investment based on risk profile and liquidity. You are very careful about while you are going to choose your investment based on the risk and liquidity. Then keep proofs of all investment expenses. You have to keep a record of all the proofs of your investment and as far as expenses are concerned. Then review of your plan every year. You have to review your plan every year based on your income changes. As you know that there are so many changes during the course of income while we are generating earning income. So you have to review your plan every year so that you can plan about your investment wisely and very carefully. So these are the small tax planning tips. But are the various mistakes which we have, which one should avoid, that is waiting till March to invest. This is very poor approach to wait March. Next, investing only to save tax without assessing financial goal. You have to assess the financial goals also, not to save invest, not to save tax. Then choosing wrong ITR form. There are so many various types of ITR forms. So if you choose the wrong ITR for or forgetting to claim deduction, so these mistakes one should avoid while we are filing ITR or while we are choosing investment options. Then what do we mean by e-filing of income tax return? First question is what is ITR? Basically ITR is what is ITR? ITR means a form to declare your income and pay taxes to the government. This is ITR, income tax return. And what are the due dates for salaried individual? You know, this is the finally filing ITR. The due dates for salaried individuals are 31st July of assessment year. Assessment year, as I told you in detail, the year where your income is taxed by the government. For businesses require audit, that is 31st October. So these dates are already decided by the income tax authorities. Then we have the e-filing of income tax return continue. An income tax return, ITR means income tax return, is a form in which taxpayer what he reports about the income earned during the financial year is first one, then taxes paid or payable, then we have the claims for deductions and exemption, then we have refund if applicable. This is about the ITR component of ITR. Filing an ITR is a mandatory. It is a mandatory when if your income exceeds the basic exemption limit, or if you are required to file under specific provisions of the Income Tax Act. So these all these component cover under the category of e-filing of income tax return. Then e-filing means, what do we mean by e-filing? This is a basic question. E-filing means filing your income tax return online through the official income tax department portal, that is https colon slash backslash www.incometax.gov.in. This is the official site of the income tax department, from where you can file your tax return online. Then authorized e-return intermediaries or software, this is another source. Then it is what is the basic benefit and what are the advantages of e-filing of income tax return? It is faster, it is paperless, and provide instant acknowledgement, which is not possible in the case of offline. Then what are the various type of ITR forms? As you know, various ITR forms are available on the site of income tax. Then ITR 1, ITR 2, ITR 3 and ITR 4. ITR 1 basically deals with the salaried and pensioners with income less than 50 lakh. ITR 2, it deals with your capital gains and multiple properties. ITR 3 deals with the business and profession. And ITR 4, presumptive income scheme 44 AD oblique ADA. So this is all about the types of various type of ITR forms. Then one must have the knowledge about the steps how to file ITR electronic or online. First one, as I told you, visit the income tax official site, that is https colon slash backslash www.incometax.gov.in. Then log in using your PAN number. PAN number is your login ID. Then select the file income tax return. You have to choose or select the option of file income tax return. Then choose relevant ITR form which is applicable to you. Then fill in income details, deductions and taxes. You will see while you open this file all these variable or all these items you can see in the form of in your form. Then submit and e-verify. What is required for e-verifying? Aadhaar OTP or net banking and bank account validations. So these are the steps we have to follow while e-file the ITR. Important documents for ITR filing. What are the various documents which is required for ITR filing? First one is a PAN card and Aadhaar card. Form 16 for salaried individual, very important. Form 16 which is provided by the employer to the concerned employee. Then various investment proofs where we have invested the money. TDS certificates if our income is already taxed by someone or some paying agency institutions, then you have the certificate proof of TDS. Then bank statement is also required. Then we have the rent receipt if we want to avail the facility or HRA, then you must have the rent receipt. Then interest certificates in which either received from the banks or from post office. So you must have all these documents while ITR filing. It's the PAN and Aadhaar card is mandatory. Form 16 investment proofs, TDS certificates, bank statement, rent receipts, interest certificate. Now what are the benefits of e-filing? As I told you, it is easy and quick. Component is there. 24 into 7 access is there. You can anytime log in on the official site of income tax department. Automatic tax calculation tools are already also available on that site. Direct refund to bank account, this facility is also available. Eco-friendly and paperless. As I told you, this is eco-friendly, there is no use of paper. You can log in with your PAN number. Interest certificate from banks and post office. Then we have penalty. If we delay in filing ITR, then what are the penalties for late filing? So rupees 5,000 if return filed after the due date but before 31st December. 5,000 penalty. Rupees 1,000 if total income is below 5 lakh, then 1,000. Interest under section 234A, 234B, 234C may apply if we default in filing the ITR either after the due date or before 31st December. How to verify your ITR? Very, very important. You must verify your ITR within 30 days of filing using what is required. Aadhaar OTP you can use, net banking you can use, Demat account you can use, bank ATM you can use, or by sending signed ITR B to CPC Bengaluru. So these are the steps, or these are the options available to verify your ITR. Then refunds and common error. What do we mean by refunds and what are the common errors? Refund issued if excess TDS paid, means the tax deduct at source if it is more than the tax calculated on taxable income, then refund is available to the individual. Use refund status option on the portal. And what are the error you have to avoid, or avoid errors in which incorrect bank account, not verifying ITR, and mismatch in income details. So you must be very full care about while you are mentioning your bank account and when you are verifying your ITR, or if there is mismatch in your income details. Then tips for tax planning. So many apart from the previously discussed slide, then another is options are also there. Invest early in the financial year. As I told you, choose between old and new regime wisely. This is one of the turning point while we are thinking about how to save the tax. Maintain proper documentation for deductions is very, very important. Reconcile AIS and TIS with your records. Then file ITR even if income is below rupees 2.5 lakh for refund or record. Very, very important, and these are the tips you have to follow, or individual or taxpayer have to follow. Then track refund. If somebody want to track the refund, is very, very important, clearly defined. Refunds are usually processed within 1 to 3 weeks. These weeks are decided by the income tax. It is mandatory that refunds will available within 1 to 3 weeks. Filing is mandatory, as I told you, if your income exceed rupees 2.5 lakh old regime or 3 lakh as far as the new regime is concerned. For old regime the limit is 2.5 lakh. The deadline for financial year 2024-255 is the 15th September 2025. This is the latest information from income tax department. So as far as the summary is concerned, what we have discussed in all the discussions in part 1 and part 2, tax planning, smart financial planning. You have very smart financial planning. Filing ITR is the duty. It is your duty and you can avail the benefit. So last but not the least, be compliant and be informed. Informed means compliant means you have to compliance with all the rules and regulation, and be informed about the latest information provided by the income tax department. And I am very much sure that after this lecture all the learners will able to define the meaning of tax, what are the various types of tax they can describe, they can analyze exemption, deductions, financial year versus assessment year, and they are also able to describe the taxable income, tax saving options, and they are also able to analyze the e-filing and income tax return, and they are also able to analyze the various types of ITR forms and steps to e-file ITR, and they are also able to describe the important documents for ITR filing and benefits of e-filing. So this is all about the today discussion. Thank you and wish you happy learning.